everyone, here's John on Trade the MBI.
Well, thank you, Steph. That was so energetic. My goodness, what a way to end the final report of the year and decade. Super exciting. We had a little minus from the previous day here on just before the end, and we kind of expected that we would get a little bit of back and forth. We had this positive extreme, and all we did was fill it back in. This was nothing critical or major from a retrace standpoint. So just fills us right back into place. Still, everything's remaining positive, though with the steel all the way down to negative 13. Any rise back here will certainly put us right back up at the peaks. We knew there would be some rollover at the final day of trading in that, so not a real shock in any way, shape, or form. It is neat that we're going to close out this decade with probably some of the best returns, who knows, ever. It may never be repeated. We'll see. There's always the potential of the future. It's not surprising that we're right in line with the expectations of what we thought the overall decade and post-war setup that I talked about years ago that would bring us to the 3,000 plus range on the S&P and well over 30 on the Dow. This was all part of the past historical identification, so that the algos fit right within it. Perfect. From an NQ standpoint, likewise, similar situation. There's no real drawdown threat right here from what we're seeing from a DOC standpoint. There's no spike in shorts or anything like that. This is just rollover and profit taking from the general move, and this continued rise of the euro certainly helps bolster things. Might have seen more of an improvement from the ES, but it certainly probably mitigated any decline as the stabilization in Europe only improves the situation. The oil rise continues to be the potential looming question mark, because if this starts to accelerate and moves into the first quarter beyond just weather, demand, that kind of thing, we could really begin to see inflation for the first time in quite some time. And the Fed not being aggressive has certainly helped stabilize things. They haven't reduced anything, but which is interesting too, because if they just hadn't raised rates like they did in the first place, number one, you'd have lower deficits significantly, and certainly a big improvement in economic growth. But they did, and it kind of mitigated what could have been some stellar performance. So we'll see how it plays out going forward. They're going to have a hard time in an election year doing anything. It's just all going to seem as a political motivation, so that's going to be a dampening effect on that aspect of the Fed really being in charge of anything as far as rates and stuff like that. So I think what we're really going to be looking at is the political dynamic and whether or not that has an impact on us as far as perception. And that's going to shift wildly, so I think we're going to be looking at a lot of shifting around based on who's in the lead, because you're going to want to move into certain categories based on who you think the potentials, probabilities lead to, and that's going to change on a weekly, monthly basis. We'll be on top of it, no doubt about it at all. From an intraday standpoint, we were right in here as we were releasing the report. We started to get this breakdown, and then once it took place, we had no steel reset until we started getting these higher pivots here. It was sort of midday. And then we started to get the cross and the turnaround right here where we dipped below, the steel came right back above it. And then we had the dip of orange in that for the rising. And that gave us a nice move back to the 50% range, just slightly above it. And of course, rolled back over again. I thought there was a potential that it would stave off once we saw this the steel come up, but it never really spiked to go above, and then by the time you got even the slightest dip of the orange coming back, it really had lost any sort of impetus, because then we ended up with this steel fade pretty quickly thereafter, and it didn't really produce any dynamic of significance. From our daily standpoint, we ended up with an add-in of the X-Hawk with a Iron Hawk, so it wouldn't take much of a return back up to have that be a winner. So that'll start out the new year depending on how that trade finalizes itself. And then also from the Opus, it went ahead and took the decline on that one for a soft sell there, but then it ended up purchasing pretty close to the same thing right back again. So I expect that one to be a net zero, especially if it turns around at all. We just have to get past this transition period for the breakout. As always, though, I will put up anything new and interesting as it pops along. But exciting way to end the decade, and we'll be sending out indicators so that we'll have those for the start of the new month. So that's going to be an exciting way to go. As always, though, trade well. We'll talk again later.